China's real estate prices have fallen and the debt crisis has intensified. According to the Bloomberg Intelligence Index, the stock value and bonds of Chinese real estate companies have evaporated by $90 billion this year. The bubble is bursting and its negative effects are spreading, endangering the Chinese economy and financial system.
The Chinese real estate market, which accounts for nearly 30% of its GDP, has come crashing down in the past 1 year. Property sales fell by 72%. People are protesting in over 86 cities as banks are freezing up the accounts of the depositors. Experts say that this is just the beginning of one of the worst economic crises that is to happen in China. When it comes to investments, the Chinese people love real estate as they have no other choice. The Chinese stock market is known to be volatile. While the global economy has hit past pre-pandemic levels and has beaten all previous highs, China hasn't even reclaimed from the 2008 global financial crisis. This leaves the Chinese people to invest all their money in real estate. As families started buying houses, the price of houses kept increasing to a point where it was unaffordable to the average family to buy a house. People started taking mortgages to buy homes, borrowing money they didn't have. When more people started taking loans, home prices skyrocketed, as the people who didn't have money before had more money to spend. Home prices started to increase to a point where even people with loans couldn't afford them anymore. But Chinese people had to buy homes to preserve their wealth. So if they couldn't buy homes in cities, they started buying real estate in the surrounding areas that are much more affordable, as no one lives there, which led to the creation of ghost cities. It is estimated that there are at least 65 million empty homes in China. A report reveals that there could be as many as 50 ghost cities in China at present. As the demand for houses increased, Chinese real estate developers started pre-selling houses, that is, selling houses before they were even built. At one point of time, roughly 90% of new properties in China were pre-sold last year. That means home buyers have to fork over cash before the properties are even constructed, while the property developers receive vast streams of essentially interest-free financing. As the demand seemed never-ending, the developers made a ton of money with the scheme. With the money paid by the homeowners, Chinese property developers were starting new projects every day, leaving the old ones incomplete. The second biggest property developer in China, Evergrande, racked up to $305 billion worth of debt, more than any other real estate developer in the world. Some commentators say its bankruptcy could be China's Lehman moment, a reference to the US investment bank Lehman Brothers that went bust during the 2008-2009 financial crisis. Evergrande was already the world's most indebted real estate firm when the Chinese government introduced strict lending policies in August 2020 to cool the overheating property market. Evergrande faced over 85% drop in share prices and has around 1.5 million unfinished properties. In 2018, Evergrande was named the most valuable real estate company in the world. To prevent the Chinese economy from collapsing, the Chinese government stopped banks and investors from giving quick and easy loans to developers. They hoped this would slow down the number of apartments being built. But the developers needed these loans to build the pre-sold homes. Developers ran out of money to finish the condos which people had already paid for. Thus, the developers were forced to stop building houses. The government needed money from somewhere to lend out to homebuyers and developers to prevent the banking system from crashing. That somewhere came from money other people had deposited in banks. The government started freezing bank accounts of other depositors so that the banks can use that money to pay to developers. This made the Chinese people furious. Not only did they lose their life savings that they had deposited in banks, but also a part of their monthly income to pay for the loans they had taken. This led to massive boycotts all over China. Hundreds of thousands of homeowners from over 100 cities came together and stopped paying their mortgages in protest. The Chinese people slowly began to understand the situation in China and refused to pay back their loans as the properties weren't built. Around $222 billion in home loans are under threat from mortgage boycotts. Imagine paying monthly installments for years for your house just to see that your home isn't being built and you had lost all your money. If all these loans default, banks will not have enough money to pay back the customer deposits, which could lead to a bank run. If the banking system fails and everyone's money disappears, then the Chinese economy will collapse. A similar situation happened in America in 2008. But the American government bailed out the banks. Even though it was the bankers' fault for this bubble, people's life savings disappearing from banks will cause a lot more protest and social problems. The Chinese government is aware of the situation and had instructed the Central Bank of China to mobilize $148 billion to bail out the real estate developers. America has an unfair advantage over China. Since the US dollar is world reserve currency, if the American government prints money, the rest of the world pays the price for inflation. In the case of China, when the government prints money, the Chinese people will be the victims of inflation.